Welcome to today's What Will Move the Market show. I'm your host Prem. It's Monday, October 13th, 2025, and here is everything you need to know as the markets open for today. Wall Street ended Friday on a brutal note as trade tensions with China sparked the biggest market sell-off in months. The Dow Jones plummeted 879 points or 1.9% to close at 45,479. The S&P 500 crashed 2.7% to 6,552, marking its worst single day since April. The tech-heavy Nasdaq bore the brunt, tumbling 3.6% to 22,204. The trigger was President Trump's threat of a massive 100% tariff on Chinese imports after China tightened export controls on rare earth minerals critical to technology manufacturing. Semiconductor stocks led the decline, with AMD falling nearly 6% and Nvidia dropping almost 5% despite hitting a new high earlier in the session. Tesla and major Chinese ADRs also took heavy hits. The sell-off wiped out over $2 trillion in market value in a single session, with all three major indices posting weekly losses exceeding 2%. Indian ADRs displayed mixed performance in Friday's volatile session. Infosys and Wipro are down 2% in line with the tech rout in U.S. markets. However, HDFC Bank and ICICI have inched up slightly, indicated strength in the banking sector. Asian markets are opening Monday under pressure following Friday's Wall Street rout. Japan's markets are closed for a holiday, while Hong Kong's Hang Seng and Shanghai Composite are expected to face headwinds from the renewed US-China trade tensions. Early Gift Nifty indications show the index trading around 25,200, down nearly 200 points from Friday's close, suggesting a weak start for Indian benchmarks. The focus remains on how Asian markets digest Trump's tariff threats and China's countermeasures. Any de-escalation signals could quickly reverse the negative sentiment, but for now, the backdrop remains challenging, with trade war fears dominating investor psychology across the region. The renewed US-China trade war has become the dominant narrative, with President Trump threatening additional 100% tariffs on Chinese goods starting November 1st. China has responded by expanding export controls on rare earth elements, crucial for technology manufacturing, and threatening further countermeasures. The scheduled meeting between Trump and President Xi Jinping at the upcoming APEC summit now hangs in the balance. On the domestic front, Tata Capital's 15,500 crore IPO is set to debut today, marking one of the biggest listings of 2025. However, grey market premiums have dropped to zero, suggesting a flat listing around the issue price of 326 rupees. TCS and other Tata Group stocks continue to face pressure, with TCS down 33% from its highs, amid broader conglomerate weakness. Foreign institutional investors turned net buyers last week, with inflows of 3,289 crore rupees, providing some relief after months of selling pressure. The focus will be on whether this trend continues amid global headwinds. With FII flows stabilizing and domestic institutional support remaining strong, Indian markets may show relative resilience compared to global peers. For Nifty 50, immediate support lies at 25,100, followed by the crucial 25,000 mark. Any breach below this could trigger further weakness toward 24,900. On the upside, resistance is seen at 25,350, with a breakout opening doors to 25,500. Bank Nifty faces support at 56,300, with strong buying interest expected around this zone. Resistance comes in near 56,900, and a decisive move above this level could propel the index toward 57,200. Given the global backdrop, expect increased volatility, with stock-specific action taking precedence over broad-based moves. Commodity markets are showing mixed signals this morning. Crude oil continues its decline, trading near $59.60 per barrel, down nearly 4% from Friday's levels as trade war fears overshadow supply concerns. The weakness in energy prices could provide some relief to Indian importers and help contain inflationary pressures. Gold remains elevated at $4,050 per ounce as investors seek safe haven assets amid global uncertainty. Given today's challenging global backdrop, traders should adopt a cautious approach and avoid aggressive long positions at the open. Focus on defensive sectors like pharmaceuticals, FMCG, and select banking names that showed resilience during Friday's global sell-off. Use any sharp dips as buying opportunities in fundamentally strong stocks, but maintain strict stop losses given the volatility. That wraps up this morning's market outlook. The week ahead promises to be eventful, with trade tensions, earnings updates, and FII flow patterns all in focus. Stay tuned for our evening wrap, where we'll analyze how these themes play out during today's session. Keep sending in your market questions and trade ideas. We love hearing from you. Here's to navigating these volatile waters successfully.